which we affectionately call halftime. And our spotlight sponsor today is none other than Steve Stump and Shirley Steve. So please give him your attention. We'll give you a short break after. Go for it.
Hey, good morning, everyone. My name is Steve Stump. So I'm not going to talk about this today, but afterwards, come and ask me why the number one question that I always get, Steve, why do you go by Insure Me Steve? I'm not going to talk about that, but come talk to me afterwards. Well, what I am going to talk about is a little bit about, jump over? Yeah, okay. Yeah. What I am going to talk about is a little bit about me and my business. This was me. After 16 years of being in corporate America and in the corporate nest, I finally stepped out on my own. Finally, I was going to be able to choose which 80 hours of the week that I was going to get to work. Who's in those shoes? Can I get a woo-hoo? Yeah, right? But this was me after the surprise and the shock, realizing how much health insurance was going to cost me and having to replace it from that corporate nest. Can I get a boo-hoo on that one? You see, we were exceeding our mortgage payment each and every month. On top of that, we had several thousands of dollars in deductibles and out-of-pocket max that we had to reach. We were close to like $20,000 in health insurance and healthcare costs before we actually got any benefits. So I talk about this a lot in 30 seconds. I found a better health insurance solution after exiting that business through an acquisition. And I wanted to share that with families and with businesses. But was there a better life insurance solution? Being in the corporate nest, you get a group term policy. So being out of the corporate world, what did I do? I go and replace it with a term policy. I wanted to learn, is there a better life insurance solution? But not just any life insurance solution. One that would obviously protect my heirs. One that would grow tax-free. One that I could use while I was alive. And finally, one that would grow in value over my lifetime. I wanted to learn whether there was a life insurance product that I could bring to the same families and businesses I help with health insurance. Well, that's when I went on a journey. I wanted to learn about life insurance, and I'll share a little bit of what I learned. So if you go out and you buy $1 million policy, you have two options. What are they? Term and perm, or permanent. Well, who do you think sets the price for a term policy? For that $1 million policy, who do you think sets the price? We do. Not you. But the insurance company. If you said the insurance company, you're exactly right. So if this $1 million policy was to cost you $1,000 a year, the insurance company would decide what that price would be. And term insurance is really kind of a commodity now. There's 36 apps on the Apple App Store where you can go buy term insurance. I know that because I have an iPhone. But who do you think sets the upper limit for permanent life insurance? If that same $1 million for permanent life insurance was to cost $10,000, who do you think would set what that upper limit is? If you said the IRS, you would be right. Now, have we had a 101? Who's met with me and had a 101? Well, it may have been a while, but hopefully you remember. We need to have some more of them. Hopefully you remember, I'm a recovering CPA. So when I saw this, I was like, why does the IRS care what the upper limit of permanent insurance is? And what I learned, back in the 1980s, interest rates were still clipping along. Remember the 70s, there were double digits. In the 80s, there were still some double digit rates. You could put money into the bank account and get a great return. Well, people started realizing that they could put 5, 6, 7 figures into a permanent life insurance policy, and they could get those rates throughout the life of their policy. They were putting so much money in and getting very little life insurance out. And the IRS came in and said, wait a minute. This isn't what life insurance is for. Yes, we'll allow you to grow your policy value tax-free, But you can't put so much money in there and get just a little bit of life insurance out and protect all of that growth from the tax. And so what did the IRS do? They put a limit on how much money you could put into these policies. Basically what they said is if you're putting more money into the policy than it's clear you're getting out from the value of life insurance, then it's clear to us, being the IRS, that you're trying to shelter that money from the taxes, and we're going to tax you before that money starts to grow, and we're going to penalize you. Well, being a CPA, this author's book caught my attention. Confessions of a CPA. I had to go read that book. Well, what Brian talked about was really interesting. Basically what Brian said, if the government ever tries to prevent you or limit you from doing something, it's in your best interest to do as much as that as the government and the IRS will allow. So the good thing is they didn't prevent you from putting money into life insurance policies. They just limited it. And with a properly structured life insurance policy, you can do those 4 things that I talked about. But I wasn't done with my journey. So, this book right here is probably one of the best books I've ever read that explains what I'm talking about. And today, I'm giving away free Kindle versions of this book. On your table is a red cup. Place your business card with your email in that red cup, and I will send you a free Kindle version. I would love to talk with you after you read the book about the concepts in that book, what you took away, and just have a great conversation. And hopefully the next time I say, who's all I had one-on-one with, I got more hands. So definitely take advantage of that. I thought I would share about some of the concepts in the book with something we can all relate to. Now, who's purchased a car in their lifetime? Probably everybody. Well, I want to say one thing. So what the author talks about is the importance of controlling and compounding your money in a foundational asset, such as a properly structured life insurance policy. Some of the concepts is best illustrated in a purchase of a car. So when you go buy a car, you've got a couple of ways that you do it, right? You go down to the dealership and you take out a loan. You pay back that loan. You pay it back a little bit more, you pay it back in the next year, and finally, you paid off the loan. Now, at the end of the loan, you've got no more money than what you started with, but you have a car. What's the alternative? Before you go down to the dealership, you save a little bit more, finally you save enough to go purchase that car. And you go down to the dealership and you buy that car. Now, just like before, you've got no more money than what you had before, but you got a car. Well, there's another alternative with a properly structured life insurance policy. You can actually grow the value of that policy. And with the right companies, you can actually pull that value back out and use it for purchases like a car. You can use it opportunistically in your life when those opportunities present themselves. It can be a major purchase like a car. It could be a house. It could be a rental home. It could be a vacation you just want to take. See, you pay back the amount that you took out of the policy loan, but here's the key. With the right type of insurance companies, they don't recognize the fact that you took the value of the policy loan out as a loan. And so your money continues to sit in the policy, earning compounded growth. That's when I figured out, I saw it. I could have life insurance that would protect my heirs. I could grow it and use it tax-free. I could use it while I was alive. Life insurance, if you use it while alive? Yes, you can use it while you're alive. And it would grow in an uninterrupted way inside the policy. With a properly structured life insurance policy, your life insurance dollars can actually do these 4 things for you at the same time. Now, I don't know how many have policies like this, but how many of your dollars are doing 4 things at the same time? Probably not many. So at this point, I probably have 1 minute left, according to the moderator over there. So what questions, what head scratchers do I have out there? I'd love to answer questions. We've got a minute left, so if we can't get to it, I'll be here afterwards, and you know where to find me every Wednesday.
How many insurance companies do you represent?
How many insurance companies do I represent? I represent 3 different insurance companies. I prefer to work with one that I think has one of the best products. It's a 170-year-old mutual insurance company called National Life Group. I also can work with 2 other insurance companies that I work with. Great question.
Steve, why you and not the guy down the street?
Why me and not the guy? That kind of goes back to my question of why do I go by Insure Me Steve? So when you do business with me, you do business with me. I have agencies and insurance companies behind me, but I ask all of my clients to put my phone number. This wasn't set, by the way. I ask all of my clients to put my phone number into their phone and call me when they have questions about their health insurance, about their life insurance. I don't want to send them to the agency or the carrier. I want to be that person. So when you do business with me, I don't sell it, forget it, I am your agent for the life of your policy. Thank you very much. My name is Steve Stone.
Awesome. That was a great presentation. Thank you.